After one of the most brutal years in the stock market, it feels like we may be starting to see the light at the end of the tunnel. But for a company like Shopify, after getting beat down for about a year, it looks like they finally hit their low back in October. Now, before the crash, there was talk about Shopify becoming a $1 trillion company. But does Shopify really have what it takes? In order for the company to reach this kind of potential, the stock price would need to 20x from now. So in this video, I'm going to share my thoughts about Shopify and whether or not I believe this company has the potential to become one of the largest companies in the world. But I don't want to waste your time, so let's go ahead and dive right in. For a quick overview, Shopify is an e-commerce platform made to help people easily start, run, and grow their own business. The company is building a global commerce operating system along with a growing set of tools and capabilities that enable merchants of all sizes to sell to anyone, anywhere. But Shopify isn't just for people starting a business. They also provide products for larger companies. Some of these companies that they help include Hyatt Hotels, Kraft Heinz, and Tesla. Now, there is another company that uses their platform, and that is Whole Foods, which is powered by Amazon. For anyone who doesn't know the difference between Amazon and Shopify, you may look at this and wonder, why would a company from Amazon provide business to their competitor? And the reality is that they aren't true competitors. See, the major difference between Amazon and Shopify is that Amazon is an online marketplace, whereas Shopify is a platform that allows businesses to build their brand. So when it comes to Shopify, they have a subscription-based platform where users can build websites through themes that are easy to use and are mobile friendly. When entrepreneurs are trying to figure out which platform they want to use, Shopify is more focused on building your brand, but with Amazon, you can plug into a marketplace that has already proven itself to be successful. But the problem with a company like Amazon is that you must compete against other sellers in the same marketplace. With Shopify though, you have your own website, so the competition is not on the same page. And so just keep in mind that even though it appears that both companies are in the e-commerce space, so they are automatically competitors, it isn't entirely the case. But no matter if you are just starting a business or you already have an established business, Shopify has turned out to be a great option. Now, one thing that is similar between the two companies is the total addressable market for the e-commerce space. Of course, both of these companies have other business segments, but when we look at the market share for the e-commerce sales, Amazon is number one and Shopify is number two. When we think about Shopify's TAM, or total addressable market, it is solid, but I believe that it will be massive over time. According to data from e-commerce platforms, every 3 online stores is powered by Shopify. When we look globally, Shopify has about 22% of the market, and this could definitely increase as we have seen an expansion in new products over the past year. Consider this: Shopify products cover almost every single part of a starting and growing business. And the products that Shopify has created are helpful no matter the size of the business or the kind of business that the entrepreneur is running. Also, they have different ways to provide businesses with payment options and capital. And lastly, they have innovated when it comes to their shipping and delivery. They have created what is called the Shopify Fulfillment Network, and I believe that this will make way for many more businesses, including the more established businesses, to want to join Shopify. The process starts with Flexport, where it's all about getting the inventory to the market. Then Deliverer, who they acquired in July of 2022, is focused on the distribution and fulfillment of the order. And lastly, Shop Promise guarantees specific delivery times for customers of these businesses that Shopify works with. So not only does Shopify continue to innovate with new products and acquire great assets, but their innovation has allowed them to be a part of almost every aspect of a business, which makes it convenient for businesses to go to Shopify. And so the biggest question for an entrepreneur trying to figure out what platform they want to use is, are you trying to just sell your products, or are you trying to build your brand? Shopify is all about the brand. And personally, I think that this is better, not just because I'm an owner of the company, but because when you think about it, customer experience is really important. And when entrepreneurs recognize the value that Shopify can provide from a branding standpoint, the fees don't equate to the potential growth. In order to help new and existing entrepreneurs with their branding, Shopify has created Shopify Collab, which is a community management app that allows merchants to collaborate with creators to promote products to new audiences. I personally believe that we are moving more and more towards people buying products from influencers on social media. At the same time though, this could even help content creators grow their brand. When we look at this upcoming generation, the number one dream vocation, according to a recent study, is being a content creator. And so when you consider the fact that more and more people are creating content, plus entrepreneurship has continued to grow, there is no question in my mind that Shopify Collabs could be a big part of Shopify's business moving forward, especially given the fact that they are now on basically every single social media platform available. Now, their revenue is mainly split up into two separate sections: their merchant solutions and their subscription solutions. Their merchant solutions are their largest part of their revenue, and they increased 26% year over year. When I first started assessing Shopify, I heard people talk about how this company could possibly become a $1 trillion company. company. So I wanted to really see what makes Shopify a company that will grow massively, not just in revenues, but as a brand, because only companies that have an incredible brand can become that large. And the primary driver for the growth we saw this past quarter were some of the main reasons I had such great confidence in Shopify to become a massive company. First, they have increased gross merchandise volume penetration of Shopify payments, which is how a business accepts much of their online payments. Shopify Capital, which is cash advances and loans for Shopify businesses, also continues to grow, which will help these businesses scale. Plus, they increase Shopify Markets, which helps entrepreneurs manage and expand internationally for global sales. So this tells me two very important things. First, as companies who use Shopify sell more and more units using Shopify products, this will have a massive effect on Shopify's revenue. This is really important because Shopify is known for having the first ever retail ecosystem where basically every part of the company's business can be run by Shopify, from the funding to the payments and the deliveries. And with a company that has great integration between their systems, entrepreneurs will not want to use multiple different companies to accomplish what Shopify can do all on their platform. But the second thing that I believe is just as important is that because they are vertically integrated, they have a lower amount of risk. The Shopify fulfillment network is a good example of this. Even if the companies that use Shopify are doing everything right and continue to sell products, but their orders do not get delivered correctly or in a timely fashion, this will look bad for Shopify. So by eliminating this obstacle, it allows the company to really control what they end up becoming years from now. So their merchant solutions are a great part of their business, but so is their subscription solutions, which allows businesses to sell products and services on a recurring basis. Each business, no matter the size, pays a monthly fee, and this contributes to Shopify's subscription solutions. The company has a variety of products, from $9 Lite to the $2,000 or more Shopify Plus. And as I said before, when these smaller businesses grow, so will their package, and this just means more revenue for Shopify. Just looking at Shopify Plus right now, that part of their business generated $35.1 million. So what is going to happen when more companies succeed and move to the Shopify Plus package, and Shopify's sticky product allows them to have pricing power? This could be a very important part of their business moving forward. And this not only affects revenue growth, but also gross profit growth. When looking at their earnings report, it's obvious that the greatest gross profit margins come through their subscription solutions, so the upgrade in packages could help over time. However, the company has reported that they are expecting gross profit dollar growth to trail revenue growth because of the larger mix of merchant solutions and the expanded headcount of Deliverer. This means that their operating expenses will be greater year over year next quarter, but will be lower than Q3. So I personally am not expecting solid gross margin growth to show up until probably 2024. Now, this was something to be expected not only because we are in a recessionary environment, but the management team said that they were going to invest a lot into their Shopify point of sale and the Shopify fulfillment network, which they plan to invest $1 billion over the next couple of years. And one of the caution flags that I think scared many investors over the past year was the decline in their free cash flow. So this will be something to keep an eye on over the next year to see if there are improvements in this metric. Looking at the balance sheet from Q3, they had almost $1.4 billion in cash and another $3.5 billion in marketable securities, and their current assets exceed their current liabilities by 6x. So financially, they're not in a bad position. When it comes to Shopify, the biggest question is, can they get back to positive free cash flow? I think that they can, especially after the Deliverr acquisition gets regulated and they slow down their investments to focus on gross profit. The reality is that we don't know how long this recessionary environment will last, and there is definitely the possibility the company could trend down more in 2023. But what about 5 years from now, or even 10 years from now? What is the growth opportunity not only for Shopify, but the entire e-commerce space? I believe that it is massive. Plus, the kind of business Shopify runs allows them to grow margins to new heights while also maintaining their incredible growth. When I look at the e-commerce industry over the next decade, there is no question that this will be much larger than where it is right now. So the question becomes, do I believe Shopify will be able to keep up with the growth rate of the sector while providing positive free cash flow? And when I consider all the different companies that Shopify is working with and the growth rates that those companies have, plus the fact that they have a very sticky product where companies will not want to leave the platform unless something significantly better comes in, I don't see how Shopify won't keep up with the e-commerce industry. And that is why over the next 3 to 5 years, I see a company whose innovation to become an end-to-end business is like no other. And that is why I'm expecting Shopify to have a valuation much higher from now. But the question that many people are asking is, can Shopify reach $1 trillion market cap? To put put things into perspective, that would be 20x from the current valuation, and it took Amazon over a decade to do that. With the direction of the upcoming generation who are now focusing on branding and content creation, plus Shopify's ability to provide products for any kind of business, I do think that they have the ability to become a $1 trillion company. But with that said, I think it will take them until at least 2032, if not 2035, to get to that mark. Now, personally, I'm holding this one for the long term, and here's why. When we imagine the company in 5 to 10 years, they will be well established while still having tremendous growth, and the businesses that they're currently working with will continue to use the sticky product for a long time. Secondly, when we think about Shopify's retail operating system, once people see that it is a good product and they are growing their businesses because of Shopify, these businesses will need to upgrade their packages. So I've built a decent position in Shopify and will continue to add as long as it's under $40. However, I will be putting more of my focus into large cap companies like Google, which if you haven't seen that video, I'll leave the video here. Hope you all enjoyed this video, and I'll see you in the next one.